I think the biggest no-brainer investments today are in the asymmetric things that the government can't print, and the two that fit that, or three that fit that bill, are gold, silver, and Bitcoin. In the interim, you can just live a dual existence. I mean, you save in Bitcoin, and then anytime you need to make a payment fiat, you just convert your Bitcoin to fiat and pay it, and that's that. And anytime you get some fiat in terms of your paycheck or excess money that you want to save, you convert it into Bitcoin and you save. So, I mean, that's obviously what's going on with a lot of people today, and that's fine. But the medium of exchange piece, in my opinion, is going to be very real. It's going to grow, and it will ultimately lead to full replacement of the dollar.
Bitcoin first emerged in 2008 as the world's pioneering cryptocurrency, initially valued at just $0.0099 per coin. Today, Bitcoin has evolved into one of the most widely recognized currencies globally, with over 200 million users around the world. As we look to the next 5 years, the cryptocurrency landscape is poised for a mix of excitement and uncertainty, as digital currencies continue to grow and develop. In this shifting environment, voices like that of Lawrence Lepard, a seasoned investor and Bitcoin advocate, highlight Bitcoin's potential not just as a digital currency but as a strong hedge against inflation and monetary debasement. Lepard argues that the best investments today are in assets that cannot be printed by governments, such as gold and Bitcoin. He suggests that investors start with these assets before considering undervalued commodity stocks, particularly in the gold mining sector. According to Lepard, ongoing monetary debasement has trapped governments in a doom loop from which they cannot escape. Despite Bitcoin's notorious volatility, Lepard sees it as a valuable store of value, especially with the increasing adoption of the Lightning Network, which signals growing usage. Lepard predicts that inflation will drive a significant shift away from traditional currencies toward alternative stores of value like Bitcoin and gold. This could potentially lead to a surge in Bitcoin's price as more people start pricing products in Satoshis rather than dollars.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
I think the biggest no-brainer investments today are in the asymmetric things that the government can't print, and the two that fit that, or three that fit that bill, are gold, silver, and Bitcoin. So, I think you start there. Certainly some stocks make sense. Commodity stocks will do well. I invest in the gold mining stocks, and the history there is that if gold goes up 10%, the gold mining stocks will go up 30%. Now, they haven't been doing that recently, and so they're still quite undervalued in my view, and at some point there's going to be a catch-up. I think you have to develop a macro theme, and then you invest around it. And I'm very highly confident in the macro monetary debasement theme. I mean, I think they're in a doom loop. They can't get out of it. We've gone past, the start point by far enough that, if anybody wants out, they're going to, it's not going to work. And obviously Saylor has pushed it as being a store of value digital asset, not really as being a currency. And anyone who's a currency expert says, well, Bitcoin can never be a currency, one, because nobody's using it for transactions, and two, because it's too volatile. And those are valid points. But all I would suggest to you is that give it a little bit of time. We're still in the very, very early days of this asset. And, the Lightning Network is still very, very small. But I was glancing at some numbers the other night and doing some research on it. And boy, Lightning Network is growing really, really quickly.
Yeah, it is.
Yeah, the number of transactions, the liquidity, the channels, all of it. I mean, I think I saw a piece of data that said channel growth is like, 1,000, 10,000% a year. I mean, it's going up. And so, look, it's got a long way to go before the Lightning Network competes with MasterCard, or Visa. So everyone feels the inflation pain, and so the store of value case is it's clearly the best use case right now for Bitcoin. Although interesting, you spend time reading Alex Gladstein's work and you come to the conclusion that, hey, there's some places where they don't have credit cards and they're not even banked, and, the local currency is shit. And, they're downloading, Lightning wallets and transacting in Lightning transactions. So, it will bottoms up. In my opinion, it's going to occur. And I think to say that it's never going to occur and that the Satoshi is never going to be a numeraire, I take the other side of that. I think my kids will not know what a dollar is, or my grandkids certainly, and that things will be priced in Satoshis, call it maybe 10 or 15 years, which is a long time. It's not tomorrow.
Oh, it's literally double Bitcoin's life, right? It's only been around for 15 years.
Exactly.
Imagine where we're going to be then.
But I do think that's where we're headed. I really do, because it is, it is a better form of money from a store of value point of view. But you're right. In the interim, you can just live a dual existence. You save in Bitcoin, and then anytime you need to make a payment fiat, you just convert your Bitcoin to fiat and pay it, and that's that. And anytime you get some fiat in terms of your paycheck or excess money that you want to save, you convert it into Bitcoin and you save. So, I mean, that's obviously what's going on with a lot of people today, and that's fine. But the medium of exchange piece, in my opinion, is going to be very real. It's going to grow, and it will ultimately lead to full replacement of the dollar. When people are getting roasted by inflation, really roasted. I mean, we saw 9% as the peak in the last cycle, which is bad. But
and that's reported.
Exactly. And
that's a reported number.
Very good point. It's much higher than that. Very good point. I mean, look, I mean, like you were mentioning earlier, like Turkey. You're in Istanbul. I mean, they're having very high inflation. When inflation starts to get to 15, 20, 25%, 30%, which is entirely possible in my view, the next 5 years, then people start getting very serious about this and realize, okay, I cannot hold. I mean, when I get a dollar, I got to get out of it as quickly as I can. Lynn's book is great on this topic, right? The money is broken. I mean, basically, the money is broken, and we got to fix it. And there are a lot of different ways to fix it, but I think Bitcoin's the best way to fix it. But owning gold is not a bad idea either. It will perform much better than fiat. I know that. And for some people, it's a better choice because it's less volatile.
Lawrence Lepard highlights several risks to precious metals and Bitcoin, such as the potential for government confiscation of gold and attempts to criminalize Bitcoin. While he acknowledges the possibility of core developers taking unexpected actions, he considers it unlikely. Lepard advises investors to prepare for unforeseen government actions, stressing the importance of avoiding debt and holding assets that cannot be printed by governments. Lepard underscores the value of living within one's means and supporting decentralized finance and honest monetary systems. He remains optimistic about the future of Bitcoin and precious metals, viewing them as key elements in a broader trend toward decentralization and away from fiat currency. While he anticipates that governments will try to impose obstacles, he believes these efforts will ultimately fail. Lepard encourages investors to stay informed and maintain a long-term perspective on these assets. For more insights, let's return to the interview and watch additional clips featuring Lawrence Lepard.
If you were to kind of point, actually for both markets, for precious metals and for Bitcoin, where would you say are the curveballs?
Yeah, so that's a great question. I mean, I think just we don't know what the other side will do in terms of the things they could pull out to try to throw sand in our eyes. I mean, they could do a 6102, which would be to confiscate it if they really felt threatened. I think a lot of us wouldn't comply, but that's a different topic. Saylor said one of his concerns, he told me one of his concerns and risks is that just the core developers go rogue, but I don't think there's a likelihood of that, a big likelihood of it. And I think that the way the process of approval of changes gets done, that it's unlikely that the thing will drift in the wrong direction and or that we'll have another fork war or another, I should say another block size war. So I think that's one of the risks. It's, I guess it would just be governments get responsible, and I just don't see any evidence of that. That's probably the biggest risk. But you know what, James? I mean, in investing, anything can happen.
Absolutely.
Absolutely anything can happen. And I think we have to be prepared for, them trying to somehow change the rules and say they're getting responsible and then maybe throwing a lot of, roadblocks in front of us. I mean, either taxing it heavily or, just making it more difficult. I mean, we saw what they did with Operation Choke Point. I mean, they obviously don't want this to threaten their existing system. And so I think, we have to be creative in our minds of what can they do to try and stop it. And I don't think anything they do to try and stop it will be successful. But I do think, having seen them operate for 40 years and knowing, the way they suppressed gold in the 2013 period and just seeing what they do, we should not underestimate them. And we should not underestimate their ability to throw curveballs at us. I think if people in general can kind of keep their head about themselves and, stick to living within their means, that's the other thing. I haven't said this throughout the entire interview. I think it's very important. Do not use leverage. Mm-hmm. We've got the bursting of a sovereign credit and debt bubble. We've got the bursting of sovereign currencies. And, go look at the Mermican Weimar chart. It's all over the web. You can find it. There's going to be volatility. And so you want to own things that people can't print, and Bitcoin, gold, and silver are the three primary things. Real estate is probably the fourth, but they can tax that, which I don't like. Own them with as little leverage as possible so that you don't get shaken out of them. Embrace this new world of learning on your own, hanging out with people who are positive, using the internet to get the truth and real information, and then saving in currency and supporting a currency system that doesn't take advantage of people. And that's kind of what Bitcoin is. And Bitcoin is number go up, but Bitcoin's a lot more than number go up. It's honesty. It's an honest monetary system. And so, I think people should be very, let me say this. As a gold bug, I was getting very beaten up and depressed until I saw Bitcoin come along and I got reinforcements. and really, to me, the beautiful thing about Bitcoin is, it lit a younger generation got lit on fire, particularly by Safe's book. That von Mises is right, and that Austrian economics is right, and that the Keynesians are wrong, and we're winning. So, as Marty Bent says, we're going to win. And once you recognize that, I guess I kind of feel better about all the ups and downs and the punches in the face and all the other stuff. We are on the right side of a big important historical trend. The people who should be worried and upset are the Jay Powells and the fiat lords of the world, because they're not going to win. And their world is actually going to get a lot better, a lot worse for them. But that's as it should be, because they've really been living at all of our expense.
U.S. tech companies are locked in fierce competition for energy resources to power their rapidly expanding AI and cloud computing data centers, driving the most significant surge in U.S. power demand since 2000. Giants like Amazon and Microsoft are vying for vast amounts of electricity, creating challenges for the Bitcoin mining industry, which is also heavily energy dependent. Some Bitcoin miners are capitalizing by leasing or selling their energy infrastructure to tech firms, while others struggle to maintain the electricity needed to operate. The intense demand is projected to push data centers to consume up to 9% of total U.S. electricity by the end of the decade, more than 3 times their current usage. Presently, data centers account for 1% to 1.3% of global electricity consumption, compared to about 0.4% for crypto mining. This disparity is expected to grow as tech companies continue to expand their operations, with analysts predicting that by 2027, 20% of Bitcoin mining power capacity could shift to AI. This competition has led to situations where cryptocurrency mining firms are directly competing with AI data centers for the same power resources. For instance, Marathon Digital Holdings, the world's largest publicly traded Bitcoin miner, lost out to Amazon for a nuclear-powered data center contract in Pennsylvania. As this energy battle intensifies, it raises a deeper question: could Bitcoin's real power lie not just in its technology, but in its potential to decentralize power itself? For more Daily Dose Crypto News, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.